You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little thing we like to call around these parts the option block. My favorite, I hope it's your favorite, bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, a little bit of education, a whole bunch of what's trading. Throw in some strategery, a lot of unusual activity as well. Answering some of your questions, appear into the murky future, stir it all together in that pot, and you have the delicious, delicious stew. That is the option block. My name is, I'm getting kind of hungry now, just listening to that rundown. My name is Mike Longo from the OptionsInsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 14th show went live last Friday, as you're listening to this live here, listeners, and, of course, should be available on our network forthwith once we get all behind-the-scenes machinations finished and then submitted to iTunes for approval and Google Play and all that other fun stuff. Usually a day or two lag time on those storefronts. So hopefully by the end of this week, you'll be able to find This Week in Futures options wherever you find your favorite Options Insider programs, including, of course, the mothership, the flagship, theoptionsinsider.com. And while you're there, of course, make sure you click on the Insider Radio Network tab, and all those fun programs, not just This Week in Futures options, will be available for your streaming and downloading pleasure. Of course, while you're there, you want to click on an article or two, maybe some breaking news in the options market. We won't hold it against you, whatever floats your boat. We're not just all about the radio here. We do a lot of radio, and we love it, but we're not just all about the radio. We write a word or two every now and then as well. I encourage you to check those out whenever you are so inclined. Of course, also available on all the major platforms, iTunes, TuneIn, Stitcher. And a lot of people are having problems, seems like, with the Google Play podcasts. I think, as with everything Google, they roll everything out in beta, and it's always kind of wonky. I saw a write-up the other day about if you have a Google Play Music app and you're still not seeing podcasts, you actually have to go into the settings and do like kind of a manual refresh of the app, and then you should be able to see it. It's laborious. So if you're on Android, you're still probably better off grabbing our app and make life a little bit easier for you, at least until Google gets all their ducks in a row. Of course, you can continue using whatever third-party service you like. I like Pocket Cast. A lot of people have, there's a million of them out there you might want to use that can jump platforms. We encourage you to use those as well. However you want to mainline our stuff, we won't hold it against you. Of course, we did make it easy for you with the app, so you can just go grab that, and all of your prayers, from an options perspective at least, have been answered. And of course, while you're listening, while you're streaming, while you're downloading, send in your questions, your comments, your feedback, your barbs and witty retorts. We love to hear from all of you guys via all the usual suspects, the website, social media, Twitter, Facebook, stock twits, and so on and so forth, even via the old-fashioned email questions at theoptionsinsider.com. All right, and with all that set and the new show coming forthwith, we are also joined by my usual compatriots, my partners in crime here on the old All-Star panel. Starting off, let's go closer to home this time. Let's see if the Skype gods are favoring him once again. He is indeed Uncle Mike Tosaw from a little place we like to call scenic and lovely St. Charles, Illinois. Uncle Mike, are you there, and are the Skype gods favoring you once again, sir?
Find out. Can you hear me?
I can hear you indeed. So, indeed,
Oh,
figuring things out live on the air, always fun.
Gotta love it. Gotta love it. Yeah, it's sunny and scenic, and it's a beautiful day today to be trading outside.
There you go. You got the little, out in the little RCM cabana out there, slinging some, rolling some puts.
That's what we always do here in so lovely, sunny, scenic St. Charles, of course.
Slinging some puts in the RCM cabana. An interesting, if not perhaps disturbing image for all of our listeners to conjure. While they're pondering all of that, let's turn our attention to far away, to the coast, to the hinterlands of a sleepy little area we know as Maine, where the Rock Lobster came in from reinstalling his boat dock. Yes, he's in the yachting club, listeners. Reinstalling his boat dock just to entertain us on the old program today. Mr. Rock Lobster, welcome back to the program. How goes the yachting? Do you have your captain's hat on, sir?
Well, if you have to put your own boat dock in, you are not yachting. Let's just put it that way. You're putting your wooden rickety fishing boat back in the water and getting ready to ply the coastal waterways. So very exciting. Yes, the hat is coming out, but I don't think it's a captain's hat. It's kind of a crusty old baseball cap.
Okay, I put my own dock in. We have our Redneck Yacht Club here just down at the sandbar about a half-mile south of my place on the Fox River. So it's yachting around here, buddy.
Hey, you know what, though? Those yacht clubs on the sandbar are great. Summertime, there's a lot of whooping it up, I bet.
It's like the country music song, the Redneck Yacht Club.
See, that is pretty awesome. We do have some destination spots in Maine that you could go travel to around. But what's funny is I've never found the maybe that could be my retirement old guy business, is just stick a bar on one of the uninhabited islands somewhere and just have all the boaters come in, because there's they do like to congregate. They congregate in different places.
The Rock Lobsters trading and rock lobstering and conjuring and boat place.
Exactly.
How's that?
Conjuring. Gonna have some magical potions.
Yes, for the funny thing for Longo, my bicycle is made by a guy who the bike company was called Rock Lobster. Still in existence, made in Santa Cruz, California.
Well, I hope you wrote to him and he gave you a freebie, because clearly you're doing him a lot of promotional work here for free on the old show. The least he could do is send you a bike or two.
Or another one. I mean, I already got one, but okay, I'll take a second one from him if he wants to give me one.
All right, speaking of congregating, let's do so. Let's all congregate together in the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. Bit of a overall, not that, compared to recent weeks, not the most exciting of days. Had a little bit of action. Most of the major indices off slightly on the day after teetering a bit more on the downside earlier in the session. Concerns about the Fed and a few other items, maybe lackluster earnings, all kind of combining for a little bit of a lackluster start to the week as well. The S&P hitting a low of about 27.5 or so. Intraday closing right around the 2084 level or so. So had about a 12 handle range. So coming off the lows of the day, so not exactly perhaps the route some feared going into the morning, but also not the aggressive rally to the north that perhaps a lot of the bulls, I should say, out there were really waiting for. Interesting start to the earnings season so far as well. Looks like people were expecting pretty lackluster earnings season. So far, it actually hasn't been that bad. About 77% of the 132 companies that have reported so far have actually beat their expectations, maybe showing the analysts aren't doing their job as well out there. Still, overall, it's not expected to be the growth season. Profit expected to contract 7.1%, according to a lot of the analysts compiled over there by Reuters. We saw some interesting moves, some big names like Microsoft kind of leaning a wee bit to the downside. The old Googs as well last week. So a lot of those kind of combining to weigh on the market. Looked like Microsoft was in that mode of perhaps rebuilding and getting some new businesses launched, like the Surface and others, and things were really kind of turning around. And you know what? Still have some issues with their legacy businesses that they have to sort out. And so they're weighing on the market again. And of course, Miss Yellen perhaps poking her head out of her hole this Wednesday. We'll get to that in just a little bit. But before we go any farther down that road, let me welcome back in my cohorts here. We'll start in the realm of the Redneck Boat Club, a.k.a. St. Charles, Mr. Uncle Mike. What caught your eye in today's market activity, sir?
Well, there was neither moving nor shaking nor rocking or rolling from anything with which I was watching today. I like to always come up with something to say, well, this is kind of the big mover from what I saw, but there really weren't any big movers. The big story that I saw today, which shows how kind of slow today was, USA Today wanting to, or the parent Gannett, their parent company wanting to buy Tribune, which the fact that what that did is that shot Tribune stock up about, I believe, around 50% on the day, just because of that offer. Now, with that, it kind of makes you think that Tribune is a $236 million company, which just shows you how small the newspaper business actually is right now. The fact that the same company that owns the LA Times, the Chicago Tribune, all of that, is that's small. It's a micro cap company. So that I thought was very interesting. But I mean, no one reads a newspaper anymore. Very few people do. But the fact that it's even that small surprises me even more. So I thought that was probably the big story on the day today. And the other thing that I thought was interesting was in the last few Fed meetings, I believe we've rallied into them a few days before. Today that was not the case. So really not a lot going on. I'm hoping that we can talk a lot about earnings this week and not about the other thing that you mentioned.
Yeah, Miss Yellen. By the way, what is a newspaper? What is that you're talking about? I have no idea what you're referring to there. I must be confused. Must be one of those confused millennials. Everyone's always talking.
I don't know. I read about them in history class.
Oh, okay. Yeah, but you're right. You know, that is a trend we've seen a lot. You know, we interact a lot with a lot of the local people on the business teams here, what's left of them in places like the Tribune and Sun Times and others who attempt sometimes to cover the world of options and derivatives. And let's just say their numbers have been dwindling quite a bit, very aggressively of late. We've seen a lot of those companies like Tribune and others move a lot of their business reporting to one consolidated location. Maybe it's in LA or others, and having only maybe a skeleton staff in an area like Chicago or others. So it's kind of been a sad thing to witness, but it's also a bit of a state of the times. And those numbers you're quoting, Mike, don't surprise me at all. But let's turn now to the realm of Maine, perhaps. In addition to putting in his own Redneck Yacht Club, Mr. Rock Lobster, anything at all catch your eye in today's activity, sir?
What's amazing, I guess I get the Wall Street Journal every day, is the Wall Street Journal finds me in the middle of nowhere, Maine. Besides the electronic edition, I actually get a print copy in my mailbox.
You get an actual print? So you're killing all those trees. That's you.
It is. I'm the one. Well, when you're surrounded by them, you're like, what's one more tree? You know?
That's true. The forest that is Maine.
There's a lot of trees here. But yeah, really, actually, once I heard that news, I went and I looked at New York Times today. I'm like, I think everybody. I figure somebody's going to want that content, right? So it's funny because when Tosaw said that, I go, that's the first thing I did to say, I go, oh, what's the New York Times worth? And I'm looking around and I'm like, oh, you know, that still has value, $2 billion. So I guess there's value left in the New York Times. But anyway, what was moving? We looked at several trades today, mostly just kind of trying to figure out how to sell some premium ideas for the Qs, XOP, NDX toward the end of the day. Just, you know, we're basically, are the Apple earnings, are they going to be a big meh? And because they're pricing that straddle for not very much money, $6. I mean, Apple had a $6. I think it closed down $6 on the last cycle. So they're not looking for anything. At least the market is not looking for the type of moves that we're used to seeing in the past. Doesn't mean it won't happen, but it's not pricing like a big move is there, which to me we're kind of having a debate about it. I think the straddle looks fair, maybe just slightly cheap if you could sell some options against it. Next week's straddle. So, you look at Google, still moved $40. You look at Microsoft, it moved 9%, which for the size of that company is a 9% move is pretty big. So, considering what they have to write off the Nokia purchase and what they lost $30 billion worth of market value or more, and I don't think they paid that much for Nokia. So, you're seeing moves that basically when they don't like it, the stocks sell off and they kind of stay in that crap heap, which is what we saw today, or what we've been seeing. Sebastian's been calling these the great sandbag earnings cycle ever. Everybody lower their earnings. The expectations are so bad that any company that's making any kind of money, woohoo! So, we can talk VIX a little bit. We have VIX tried to trade a little higher today. You have some weekend effect. Whatever that premium was seemed to have evaporated, or some of the pop today from the move down. But as we close almost down. We were down like 0.5%. Couldn't even shake that out. So I think basically the number to watch is the VIX future. As soon as the May future dips below 16, if it stays there, we would probably do more sideways to up. I guess the Fed's got their last thing to say, but I'm looking to see if there's anything to load, because of all futures, if there's premium anywhere, they're in those products right now. So, and it's not as much as it was last week, but now that we've gotten through the cycle. But I'd still like to see some of these psychological numbers broached, just as kind of a get on board and sell the vol kind of guy that I am. So, we still have the May ordinary future, 1640. So it's still hanging in there, and really has not been able to break and stay below 16, which is, to me, it's like that 1% a day move. Once they give that up, volatility tends to slide a little bit. So we'll see. And that's the excitement we had there today, as far as what was trading.
Speaking of that, those VIX futures, and interesting piece out there in Bloomberg this morning. I'm sure you saw it. They were comparing the cost of what they term the cost of carry. Everyone has their kind of own metric for this. The way they define it is the 3-month future versus the VIX cash itself. So you're talking about there in the July range, right around 1920 or so, versus a VIX cash, which is hovering as we are recording this right around the 14 handle, a wee bit north of that. They're calling that an almost 4-year high. So they say almost, not exactly a 4-year high, relative, of course, to the VIX cash. So again, they're speculating that article. Perhaps people who've been loading up on some Vegas and volatility protection of late may take advantage of that opportunity to dump it, or who knows? Perhaps they may keep a hold of it for some future levels. At the same time, they made an interesting comparison to the old skew out there in the S&P. Saying people are still holding on to themselves some VIX upside, even though puts are not perhaps as expensive as you would think, given certainly the protracted rally we've seen out there in S&P land of late. You'd expect those puts start getting a little bit of juice on them, but not apparently yet. Again, according to their measure, I'll have to pull it up to see exactly how they measure. They look at the 30-day, so pretty much front month put and call. They don't say how far out of the money. I'm assuming 25 delta, so 50 delta risk reversal. They're saying that's fallen to its lowest level since 2014. So the puts lowest level of 2014 relative to bullish contracts. By the way, if you're into that kind of stuff, make sure you check out our new TWIFO, This Week in Futures Options. Some pretty cool metrics coming out of that, and our friends over there at QuickStrike, where we talk about not just the whole skew, which can be misleading. As you said before, we're talking about things like the skew index, because there's 2 moving parts there, the call wing and the put wing. And over there, at least in the realm of futures options, we have the indicators moving in some interesting directions, and actually breaking down the call wing movement and the put wing movement in 2 separate portions, which is pretty cool stuff. So check out that show if you are indeed so inclined. Learn a little bit about skew and crude and gold, and also maybe some ags, and maybe if we're bored, maybe a little bit of S&P futures as well. And Mr. Rock Lobster, you mentioned earlier about the good old earnings volatility, aka the straddle. It's got some big names coming out this week. Of course, you mentioned the good old Apple. Oh wait, are they actually after the bell right now? Uncle Mike, you better scramble to your analytics platform, your trading platform, because I think they're reporting as we speak. I'm just kidding, of course, listeners. So you're listening live. Don't get all worried. I like to tease Uncle Mike around Apple earnings day. A good old Facebook come out later this week and Amazon. So we thought we'd ask our options question of the week this week for you guys. Again, going back to the earnings, because you guys love yourselves some earnings. We thought we'd ask you which of these straddles is going to be the most accurate. At the time we wrote this up, which was a couple hours ago, Apple was pricing in a little bit south of 5%, about 4.5% move. Facebook about 7%, and Amazon right around 8%. So we said to you, which one is going to be the most accurate straddle? Which one is going to be closest to predicting the actual move? Before I give my answer and before I say what people are voting, I will open it up to the all-star panel. Mr. Rock Lobster, you were talking earnings straddles. We'll start with you. I think you mentioned, I thought you said you're thinking about Amazon before, or maybe Apple. Which way you're leaning? Of those three, which do you feel would be the most accurate, sir? And which way do you think our listeners have voted?
Oh, geez. Okay, so I'm going to say the Apple straddle. I'm going to stick with what I said. I'm going to say it'll be slightly underpriced, this way the straddle price is. Facebook, I think, is the most overpriced of the straddles because it hardly ever moves on earnings, as I recall. Amazon will be underpriced. So I'll just do all three, go for the trifecta on those.
So I'll put you down for Apple being the most accurate then.
I think Apple will be, as far, when you mean accurate, mean hit that number?
Yeah, hit closest to that number.
Apple will probably will be closest to its number because that's the one I like to sell some upside or downside calls against. So that I think would be closest to the number.
And which way do you think our listeners leaned?
I think the listeners are leaning. I'm going to say, since Amazon is more the darling now, they're going to say the Amazon straddle is going to be the most accurate.
Interesting. Uncle Mike, which way do you lean and which way do you think our audience leans?
I'm leaning the same way as Andrew, but for a different reason. The reason that I'm leaning that way, well, maybe it's the same reason. I don't know. It's more just along the lines of, I think a lot of the news was out last week just with the talk of the disappointing iPad sales. So that's the reason, and that's why we had kind of a $5 pullback on it a little over a week ago or last week. So that's kind of, with that, I think Apple is going to be the most accurate of the bunch. Amazon always does seem to move a lot more, although I don't follow Amazon earnings quite so closely. But with Apple, I really think that Apple is going to be the most accurate of those three. And I think our audience is intelligent, so I think they agree with me.
Always a sign of a genius, right? He thinks the exact same way that you do. Amazing how that works. So yeah, well, actually, I'd have to lean, I think, Apple as well, just for pure numbers sake. You're thinking about a sub 5%. It's the lowest, most volatile number out there. So it probably has one of the best chances of coming in close to that range. You get into the 8%, the 60 handle predicted moves. There's a lot of room for margin of error there in that Amazon name. So I definitely lean Apple. Actually, Apple, though, according to our audience, I think the polls only went out a couple hours ago, so it's going to have a few more days to bake. So these are just early numbers we're getting right now, listeners. But in the early voting, Facebook blowing the doors off. Nearly 70% of votes leaning for Facebook, which is kind of interesting. That probably would have been my second choice, just pure mathematics and volatility-wise. I would have gone that way. Amazon number 2. So Amazon beating Apple, about 19%. Only a paltry 13% coming in saying Apple will be the most fairly priced. So interesting. Maybe, who knows? Maybe that means the Apple zealots are back in force. They think it's going to blow off to the upside. I don't really think so. But you could perhaps charitably interpret it in that sense. Or perhaps people just loving themselves some Facebook. Either way, interesting stuff. We still have a few more days. Obviously, Apple coming out tomorrow. Facebook, I believe, after that. Then Amazon the day after that. So we got a few days here for this poll to run. No cheating. After the name's out, don't vote for it anymore. You can if you want. I think it's going to be the best one of the week. But again, if you want to make your voice heard, surf on over twitter.com/options and let your thunderous voice be heard. I know, Mr. Rockloss, before we head out of the trading block, I think you wanted to dispute Bloomberg skew numbers a little bit, did you not?
Well, I want to just pull up the bulge bracket. Remember CSFB? Didn't they have their 10% out of the money SKU number? You know, where the
everyone's got their own
worth more versus a call.
Everyone's got their own freaking flavor of SKU. That's why I like to define it, at least for our listeners, you know, because someone does how far out do I have to go to get a call that is equivalent to the put, or I want to go this number of months out for the put versus the call, or this crazy nonsense. So SKU comes in many flavors. It's like Baskin Robbins.
It does. I think it's a good teaching moment for the SKU where, as an SPX trader, you've got put SKU, at the money number, and call SKU, and all three are separate but equal. So, and I think everybody tries to, a lot of the bulge bracket firms, they try to do some combination of them, you know, to skew, no pun intended, but their outlook, because it sounds much more fantastic when, oh, this is the one that's at the all-time whatever lowest spot, you know, and it could very well be, but pricing that, there's three moving parts to the curve, so. There's actually a fourth dimension because the whole curve can shift, but we'll save that for another day. Another option, another trading block.
Are you dare to mention second order Greeks to me now, sir? You just derailed the whole program. So I'm not
going to blow your program up.
I'm going to mute you before we go down that mad hole of second order Greeks, and instead keep on rolling into one of my favorite portions of the program. Indeed, it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune, that funkalicious tune. We should maybe play a Prince song in there in honor of the late lamented Prince. But instead, we got that tune. So let that be your funkalicious tribute as we move on in to the Odd Block, the portion of the program where we break down the weird, the wild, the wondrous, the whimsical, the downright just sometimes head-scratching paper that goes up in the world of options. By the way, people always get confused. Paper, we define it all the time. I guess we can define it again. People write in almost weekly with that question. What the heck do we mean by paper? Just the customers out there, the big customers, what they're trading. Usually the big firms we're talking about here. We're not talking about the Aunt Agnes, the Aunt Edna out in Iowa doing her 10 lots. And it comes from the old days on the floor. People write in with a paper ticket, and the paper would literally walk into your pit to do a trade. That's where the term comes from. So for all of you out there who want to write in saying, what do you mean by paper? Get it all the time. That's what we mean. All right, moving on to our first victim name, whatever you want to call it. I still haven't figured out if it's a boon or a bane to be featured in this segment. Probably a little bit of both. Going to kick things off here in a name we've talked about it once or twice here in the past, rearing its ugly head yet again. This is good old XLV, the Health Care Select Spider ETF, closing today about $71.60, off nearly 0.5% or so on the day. This one's been popping up on our radar, popping up yet again today. Certainly from a volume perspective, this name averages about 13,000 contracts a day, doing a whopping 58,000 today. About 26 or so to 1 calls over puts, listeners. That should give you some indication of what caught our eye out here. Yeah, it was some size call action. In particular, looks like a little bit of the old roll up, no out, just up the old food chain. This time it was the SEP 7274 vertical, going up 20,000 by 30,000 times. So a total, I remember I said about 58,000 contracts, 50,000 of them coming in this one mega roll up. We saw paper, looks like paper selling out the 72s and then coming in to buy up the 74s, doing all that for 90 cents. If you go back, this trade, actually, we first highlighted this one back on April 5th, the first leg anyway. Paper looks like they bought quite a bit, 20,000 to be precise, of the SEP 72 calls. They paid about $1.50, so today at these prices, this bid of $2.50, they got about $1 out of those 20,000 times, so not bad. Now they're turning around, and as is indicative of playing with a little bit of house money, they're closing out that paper, taking that money off the table, but then reestablishing at a farther out strike up the strike chain, or not farther out month, but strike-wise, so the 74 strike, and doing it a little bit more, because, hey, it worked once, right? It's got to work again, so they're doing it 30,000 times this time, doing those around that $1.50, $1.60 range here. I don't have the exact price on the 40. So all those things indicative of a house money roll. Also open interest right around 20,000 contracts on the SEP 72s. Again, indicative that this is someone playing with a little bit of house money. Probably got a little bit of a smile on his face to boot there, Mr. Rock Lobster. Looking at a little bit of a 1-year chart here on good old XLV. This thing has flirted with some higher levels in the past, also some substantially lower levels, including back on our infamous August 24th, when this thing hit a whopping $56. That was, of course, a bit of an aberrant print, but in actual trading has gotten down to about 62, 63 very recently. So this thing has been pretty much been looking up ever since our friend picked it up here back in about early April or so. It was trading right around, about 68.5, right around when he picked these up. So the thing's rallied a good 3 handles or so. He's decided, discretion, better part of valor, he's going to roll up 74 strike, a wee bit aggressive, given the fact that the highest it's hit recently is about the 77 level. Again, if he hits those levels, he'll be a happy camper, but still interesting stuff. Mr. Rock Lobster looks like the traditional house money roll, and if it worked once for 20,000, it's got to work even more for 30,000, correct?
Might as well, right? You know what though? I like the ones that go up. Do you remember what was that movie, The Freshman, with Marlon Brando? And he's got his stockbroker on the phone. He's like, I don't like them when they go down. I want them to go up. Speaking of the stock, so if you're going to look at unusual activity, the guys that roll the winners up, those are the ones that are a little bit more interesting to kind of look and follow around. So healthcare, I guess we're going to keep spending on it. So they're looking for, I guess, 1-year highs again. So the timing's right too. They pick like a September, and they're going to kind of sit around and watch it go up. So I think it's the right way to buy calls, because if you're going to buy calls, I figure you really need to make real money on them. So it's on the savvy scale. He wants to roll, take the money off, take his $2 million and go have fun. I think it's hard to say that's a bad idea.
Hard to fault the fellow. He's sitting on some cash. So interesting stuff. I haven't seen The Freshman. That's one I think he's walking around with that lizard or something. I've never actually seen that one. I'll have to check that out. An old school recommendation coming from Mr. Old School himself, the Rock Lobster. Moving on. If you like upside calls, well, then we got you covered here in the Odd Block today, listeners, with our next one, of course. A little bit more upside calls for size. In particular, we are talking about another name we've talked about on the show in the past. Been a little while. This is good old BankRate Inc., ticker symbol RATE, R-A-T-E. Closing today pretty much unched right around the $9.30 level. This is the name that does, on a given day, a whopping 281 contracts. Today, doing about 10,500, a whopping 131 to 1. Calls over puts, listeners. Only, let's see how many. Only 79 puts went up today. The rest of that all in the calls. If you are so inclined to look, and indeed we are, we're going to roll on out to the June 10 strike and month. That's what caught our eyes, listeners. In particular, size call overwrite going up here on that 10 strike out in June. We saw, starting off the day, about 5,000 of these June 30s going up. Paper writing for about 65 cents. Going up on the Amex. Good old price variation. A lot of you writing in about that question as well. We'll get to that in a little bit, what those kind of things mean. But again, usually that indicates some sort of stock probably going up somewhere, but didn't really see any stock going up. And again, that's why those trade tags sometimes could be a little bit misleading. Pay attention when you see those going up and do your own homework as always. Saw more going up as the day proceeded. About 2x total, like I said, of about 10,000 going up on this strike. So our friend here is going up pretty much for about, if this all plays as expected out to June, looking to get himself a cool 6% or so on this name. Not a bad trade. A lot of people wouldn't mind getting that for a few months' work. Pulling up a chart here of good old rate. This thing has seen better days of late. It was trading in the 12, close to 13 range back in mid-February. Then got its legs cut out from under it. Got cut pretty much, looks like by about 50% by a bad number there in the Feb cycle. And it's slowly but surely been making its way back. Our friend here deciding to draw that line at the 10 handle, this far and no farther. Mr. Rock Lobster, what's your take here on our friend going a little bit farther out to find some yield in rate?
It looks like kind of like a decent buy, right? This stock like you said, it's been as low as 6 and as high as 15 this year. So it looks like a good place in the middle. What do they? I think they do interest rate analysis and stuff like that, and send the results out. So it's kind of like one of those cash churning businesses. I mean, the book value they're saying is $7, almost $8. The stock is $9.32. So I don't know what made the stock go to zero, but it looks kind of cheap. I mean, it just looks like the kind of stock you want to. It looks like the kind of stock you want to buy, right? And there looks like there's value there. So, I mean, it doesn't look like a terrible trade. And I'm just guessing somebody's riding against an equity position. Rarely do you see like a June call sale like that. It's a lot of margin, and it's a long way to go to bet on a stock going down. So I like it as a buy right, though. I think it looks reasonable.
Yeah, he's probably sitting on some stock already. He didn't have it go up today. But interesting stuff, I agree, usually done against some size stock sitting out there somewhere rather than just nakedly blasting out some calls. That could possibly be it as well, but that would be an odd play. I tend to concur. Moving on, Uncle Mike, cover your ears, sir, because we're getting into your neck of the woods here. This is Dollar Tree, good old DLTR, closing a little bit shy of $81, about $80.92, pretty much unched on the day. This is the name that does about 3,900 contracts a day, doing a nice nearly 11,000 today. And what caught our eye out here in good old Dollar Tree land today was another of, first off, all calls today out here in the old odd block in particular was another, this time not just an up, but the old up and I don't know, in perhaps a little bit of a backwards one, kind of funky here. In particular, we see our friend here putting up, looks like they're selling out about 5,000 of the AUG 77 halves. Again, the stock closing nearly 81 today, so those are looking pretty good for him, doing those for $6.55. Then looks like he came in doing that 5,000 times against 5,000 open interest, so clearly closing there, and then doing 5,000 to open on the June 80 strike. So you don't see this very often. Usually you see the up and out. Very rarely do you see the up and in, but that is what exactly it looks like we're seeing here today, deciding to reestablish here on the June 80 strike, so right around the at the money. This is a pretty interesting one, pretty aggressive, because clearly he's given himself less time to work, less time for his trade to go his way, but also finding a strike that seems to fit in where he wants to be from a premium outlay perspective. This thing's been kind of the definition of just aggressively range bound from about the 75, 74 down there on the bottom there all the way up to about 82, occasional flurries up to 83, 84 up there on the upside. Just multiple times since about the end of last year, beginning of this year. So this thing plays out its pattern yet again, then it's due for perhaps another bounce to the upside, or perhaps it will continue down a little bit lower before that happens. Either way, our friend here reestablishing closer to home, saying, I want this bounce yet again, and I'm positioning for it to happen even closer with June. So, Mr. Rock, I should take us home. I'm trying to think now. We've been doing this for a while. The number of up and ins we've seen on this program, I can probably count those on one hand.
Yeah, it's like 1 in 100, it feels like, doesn't it?
If that.
Literally, if that. What I'm interested to see with Tosaw, it's a pretty direct bullish trade. They're just going and buying up the June 80s. Is Dollar Tree now? One thing I've noticed about Dollar Tree, 4 times this year it's dropped to like 75 and then bounced again to like 83. If you look at the chart, it's like it's a seesaw. Like it looks like shark teeth or something. It's just down up, down, up, the same pattern. So I'm wondering if this person is seeing that, saying, well, I'll give it one more shot for a rip up. So, but to me, anytime I see I see out and back, it feels like a love your broker trade, even though it looks like they're probably up some money on the August calls. I don't know why you abandon that position and go to June, but that to me is always, that's a surpriser for me. That would not come out of the Andrew Advisory catalog.
Yeah, the only thing that I can think of is just maybe they're really expecting a lot more upside in the near term. They want to just put it up for the near term and then prepare to roll it back to August or something like that. If it does go up to like the 79 level or something along those lines, or stays there for something along those lines. Because the other thing that's interesting about this is that it's all in the money. So I don't know. This is a head scratcher for me as well.
But I still feel like they want to be long end. I don't think this is a long. It doesn't feel like long calls versus, like, say, a short stock position. I mean, you're shorting Dollar Tree, you're probably not doing very well. So it just feels like some kind of a long trade, and they just want to juice it to the upside. So again, this is another one where I feel like you only do something like this if you really know it's going up. So it's, probably worth keeping an eye on here for old Dollar Tree.
Well, maybe the broker offered him a discounted commission rate for the rest of his career if he just put in a bunch of extra contracts, and so the fund maybe wanted to do this trade just to, like you say, love your broker.
It could be.
Probably not.
But probably not.
Yeah, this one screams to me of someone, again, you're right, he still wants the upside, but he wants to also keep a little bit of the dollars in his pocket that he made on those AUGs. So he's willing to cut himself a little bit short and save a little bit on the outlay. Again, that could come back to bite him. He's getting less time to work. So we shall consider, again, there's probably a reason why this is 1 out of 100, I think, is charitable for the reviews we do here on the Odd Block for the old up and in. So probably even less than that. I'll have to go look. But yeah, probably on one hand, the number of times we've seen this. An interesting trade. Let us know, listeners, what your thoughts are on the old up and in. Why would you do it? Would you ever do it? Let us know. Meanwhile, we're going to keep on rolling. Time for some strategery. It's Monday. It means it's Uncle Mike time. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. You guys know the drill. It's time to unleash Uncle Mike for a little bit of options, wit, and or wisdom. Perhaps a little bit, sprinkling a dash of hilarity in there as well. No promises, but perhaps we can always hope here. It is Monday after all. We can all use a dose of levity at the end of the day here. And I do hear some whisperings when they're not devouring their jam. Their delicious jams and jellies. The minions are whispering in my ear something about the old yarn, the old saw of dollar cost averaging. I don't know, Uncle Mike, you might have your work cut out for you if you're going to try to make this one full of wit and or wisdom, but the floor is yours, sir. Have at it.
All right, I will do my best. But yes, as per usual, the minions are right. Just depending on which ones you hire, it's a very tough labor market these days with minions. You never know what you're going to get. Even the background checks are kind of difficult because they've worked for a lot of shady characters in their day. You never know. But I digress. I want to go over dollar cost averaging for the 2 cycles of investing. The first one is something that you've probably heard from every financial advisor in the world, but I want to go over it anyway just so we have a point of reference. Right now, for my kids' accounts, what I'll do is maybe if we get some money, if we're going to put some money in there, we will purchase commission-free ETFs. And it's a way with which to get some money built up into the market for the long term. We do it for a lot of different things. You can do it in any account at TD Ameritrade that offers the commission-free ETFs. So, for example, IVV. That's one commission-free ETF that you can buy. It performs very similar to SPY. I think there's options on it. I don't know, but it's one to where we're just looking to sit on the underlying, and we're not looking to do any options with it at this stage. And so with that, it's kind of like a good way of getting into the marketplace for a minimal cost. And you can still have a brokerage account that way. Another way with which you can dollar cost average, of course, there's always Vanguard. You can do that type of thing. And the concept behind it is that you put in X amount of dollars per month, and when the market's up, the shares with which you own are increasing in value, and that's a good thing. And when the market's down, you get the ability to buy more shares because of the fact that you're putting in the consistent amount of money every month. That's dollar cost averaging, and that's very common in 401k contributions through work. You get X amount deducted from your paycheck every week, and it's kind of a way with which to save and yet still have some exposure to the marketplace. And there's many commission-free ETFs. You don't just have to invest in stocks. They have them for bonds. They have them for, I believe they do have them for commodities, I believe, but either way, that's something with which you can investigate on your own. But what I want to go through today is how can you dollar cost average or not necessarily have a big bit of exposure to the marketplace when, let's say, you're past the stage of working, you have a larger amount of money and you're looking to protect it, but you still like the idea of buying more shares on the way down. Well, the collar is a classic way of doing it. Now, I've talked about the collar. I've beaten that strategy to death on this show over the past 500 episodes. 500 plus episodes, I should say. But I want to go over it again because let's say, because I think the sentiment that I'm going to say would probably be fairly common amongst a lot of our listeners. Let's say you're looking at the market and just to oversimplify things, everything you own is in cash right now. And you're thinking, well, Mike, I want to get into the marketplace, but we're close to the all-time highs. And a wise man once said, when you're at all-time highs, there's never been a better time in the history of the entire stock market to sell than right now. Now, it also might be a good time to buy, but in the history of the market, there has never been a better time to sell than when you're at an all-time high. That's an undeniable truth. So with that in mind, you get a little bit nervous buying when the market's this high. But on the flip side, maybe you feel that earnings are going to be great. There's going to be more free money on Wednesday from Miss Yellen, whatever the case may be, and the market's going to go up, and you want to be a part of that in some way, shape, or form. But on the flip side, you always want to have your cake and eat it too, and you don't want to have that much downside effect, that much downside exposure. Well, the collar solves that problem in a lot of ways. Yes, you'll have some upside, but you'll have to give some of it up by having the covered call section of it on, meaning you, and this is an oversimplified example, you own XYZ ETF, you maybe sell a covered call 10% out of the money and you buy a put 10% out of the money. So you have a 10% upside, but you won't lose more than 10% to the downside. Now, here's where dollar cost averaging can come into where this can come into this type of a strategy. Let's say that the market goes higher. Well, the market goes higher, and let's say you do absolutely nothing. Well, you'll sell your shares once you hit a 10% profit on the marketplace. And you'll have to get back in, but cry me a river, you just made 10%. What's the big deal? But let's say the market goes down 20, 30, 40%. We have another year like 2008. Well, if that's the case, then it's mathematically impossible for you to lose more than 10%. But remember, the market's down 40%. So let's say you put $100,000 into the marketplace. And now your shares are worth $60,000. Well, with that, you have a put option that's worth $30,000. And let's just oversimplify this and assume that you waited until the day before expiration to do all this, and that the bid-ask spreads are a penny. It's not that way in real life, folks, but let's just say that it was that way if it went that far in the money. You'll understand the concept better if we think that way for now. So with that, you have that put option that's worth 30 grand. Your stock holding is worth 60 grand. And that short call that you sold is worth maybe a penny. So let's buy that short call back for a penny. So that way it's out of the way. Boom, we're all set. Now you have two positions, your stock position or your ETF position and your You have your two positions. I'm sorry. You have your stock position at 60 grand, your put option at 30 grand. That's 90 grand altogether. And yeah, you're down 10%, but here's what you can do with the dollar cost average concept. That $30,000 put option, what you can then do is buy another $30,000. You can sell the put option, and now you have $90,000 worth of the market. So with that, let's say that the market comes up 10% in the following year, then the market goes higher by 10%, and you now have, okay, let's make it go up 11%. It goes up 11%. Now you're at 100 grand. So in that 2-year period that you're doing this, and let's just assume that you're doing this for 2-year periods, you did the collar the first year, and then let's just say you do nothing the second year, no protection at all because you feel the market's way down. Now, over a 2-year period, the market's still down 30%, but you're at break even. Following year, the market goes up another 30%, and everyone's saying, oh, thank goodness, it's the lost decade. We got our money back. But you're the one that's being more savvy. You're actually up 30%. That's how you can use the concept of dollar cost averaging when you're at the stage with which you're no longer contributing money to the market. Dollar cost averaging dictates that you continue to buy shares when the market's lower, but you can buy more shares because of the fact that you have money coming in from your everyday income from your job. Well, if you're retired and you have a good chunk of money and you don't have income per se from your job and dollar cost averaging isn't for you, what I just explained is another way with which to do that and still have the dollar cost average concept work for you. So with that, if you are in that stage of life and are looking to dollar cost average in some way, or your sentiments mirror what I just said, give me a call and we can talk about that. And we'll talk more about that at the end of the show. But for now, that is what we have for today. And I would like to give a special shout out to my minions and the Chicago Blackhawks for tying up the series. Let's see if they can win it tonight. That is all for today.
Thank you, sir. You are truly a man for all seasons and indeed all sports and all options, too. He doesn't just roll puts, listeners. He'll roll a call or two every now and then as well. So give him a call if you are indeed so inclined. Meanwhile, we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, we're coming into the home stretch here. It is Around the Block time, the portion of the program where we break down what's coming. And it's an interesting week ahead of us here from an economic calendar, from an earnings calendar. We are indeed, like I mentioned, in the teeth of earnings season. A lot of the big names that you guys like to watch coming out this week. We mentioned before, Apple, they're kicking it off tomorrow after the bell. So you still got another day or so to trade around with that one. I said going into today's show, they're pricing that straddle right around $5, about 4.5%. We'll see how that holds, maybe expands a little bit into the number tomorrow. We also have Fiat Chrysler. We got 3M tomorrow. We got Chipotle, the former stealth Apple. I'm not sure really what to call them now. They're kind of a totally different ball game. The stealth salmonella, perhaps, over there at Chipotle. JetBlue, Office Depot, lots of different names. Whirlpool, Spirit Air, they of the infinite upsell. If you've ever driven or ridden on Spirit Air, you know what I'm talking about, listeners. Facebook on Wednesday, they were pricing in this morning at least about $8 on that straddle, so a little over 7%. We'll see how that holds going into the Wednesday number. Again, if you have your own opinions on how those straddles will perform, make your voices heard in our Twitter poll. It's going to run through Thursday, so you got a few more days to make your voices heard. We also got Hilton, NASDAQ, Six Flags. I was just there yesterday for opening day here in Chicagoland. And then Thursday, we got good old Amazon after the bell, as well as Ford. I haven't talked about them in a while, but they've been an interesting one to watch. And, of course, keeping it close to home for us, CME, as well as good old Coke. So a lot of names. Again, Amazon was pricing in right around a $50 straddle, nearly 8% as of this recording time. We'll see how that holds. And again, make your voices heard over there on Twitter if you think otherwise. And of course, we also on Wednesday, everyone's paying attention to see if Miss Yellen and the gang will pop their heads up from their hidey hole and shock the world with an emergency cut in the middle of their meeting this week. I laugh because it is kind of ludicrous, but nevertheless, you have to watch out for those kind of curveballs out there. Speaking of curveballs, we turn once again to the Rock Lobster, that curviest of curveballs himself. Mr. Rock Lobster, what are you watching for the week to come, sir?
Well, not a whole lot different than you are. You've got a little yelling, you've got some earnings. Like I said, the great sandbag of all earnings cycles, it feels like, after the January and February. And, I haven't heard a whole lot out of interest rate shenanigans lately. Although the EC, they just keep going with the DEFCON 5 negative interest rates forever. I'm like, what? I don't know when they're ever going to wean the markets off it, or wean themselves off it, actually. I think the markets would be able to handle it if they just got back to some sort of normal monetary policy. But hey, I'm not the one getting paid the big bucks to do all the monetary thinking that those guys are doing. So, and ladies, to be honest. So looking at that, and the only other thing is, gold keeps wanting to make new highs. It's or new local highs for the year. It keeps butting up against like 1,200, pulling back, whatever. Just that levels can't quite kick through there every time it wants to. So let's see if the gold bugs can stay buggy or not, because that has been usually looking for basically more inflationary stuff coming out of Japan, Europe, and the U.S. So we'll see if it can maintain.
All right, sir. And before you go back to repair and fix your yacht and your dock, we shall welcome on Uncle Mike. Uncle Mike, what are you watching for the week to come, sir?
Well, I got to get my dock in. The river's a little bit high right now, so hopefully the river level comes down a little bit so I can put the dock in. But just to reiterate what Andrew said, I think that Wednesday, it could be a resounding meh. That's kind of what I'm thinking it will be. And I'm hoping that earnings are more of what moves this market for better or for worse, as opposed to Wednesday. I'd be curious to know if Yellen is really watching how the earnings are this week, because this is kind of an interesting time to have a Fed meeting, is right in the midst of earnings season like this. So I think that, like I said, I'll definitely be watching earnings, I'll definitely be watching the Fed, but I am thinking and hoping it's going to be a non-event. And the other thing that's starting to happen is bonds are starting to come down a little bit in price. So if you look at TLT, it's kind of been coming down, not a lot, but just a little bit, enough for me to take a look over the course of the last couple of weeks. So that is what is on my radar right now.
All right, listeners, that music means it's time to bring the Around the Block segment and also this episode of the old option block to a close. But one last time before we fade into silence, let me bring back my cohorts, my partners in crime, see what they have cooking that may interest you. Starting out in the land of private docks and lobster, Mr. Rock Lobster, what's cooking in the land of the pit for our listening audience?
May 7th, actually very similar to what Mike was just discussing, managing longer-term trades, portfolio protection, income generation, all that kind of stuff, learning about beta weighting for a particular option portfolio. That will be May 7th at Option Pit Saturday class for usually the price of what I say it's an 8th out of 10 lot.
There you go, listeners. Check it out, optionpit.com, to learn more. And Uncle Mike, what do you have cooking for our listeners today, sir?
Well, if you would like to learn a little bit more about managing your portfolio, two things you can do. The first one I haven't talked about in a while, but head to Amazon for your Kindle app. Buy my book, $2.99. Go long, new option strategies for buy and hold investors. If you don't like it, well, what the heck? I don't have a fancy 8th on a 10 lot analogy for it, but what the heck? It's less than $3. Or if you just want to contact me directly, feel free to do so. Tosaw at rcmfs.com, or give me a call, 312-212-3531.
There you go, listeners. Go along with Uncle Mike. Surf on over to Amazon. Pick up this book. He'll be a happy camper. And I don't have to hear about it anymore, so that'll be a nice thing for all of us. I'm just kidding. Check it out. I think you're going to like it. Newly revised and updated for the new year. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. Remember, stay tuned for the release of TWIFO this week in futures options very soon as well. If you like all that stuff we were talking about earlier in the show about skew and the call wing versus the put wing and all that, so we get into that in a lot of detail on that show, and a lot of names like crude oil and corn and soybeans and gold and all the other commodities that we don't get a chance to really talk about on a show like this. So check it out. It's a fun new addition to the network. Went live streaming last Friday. Should be going live on the network sometime this week, so stay tuned for that wherever you find your favorite Options Insider programs. And, of course, we'll see you next time on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.